I think we are live now. First of all, hello everyone. Thanks for coming for this webinar on a Friday afternoon and especially on the 1st of May. I'm sure if it was normal days, I don't think you're going to have anyone, really getting on the 1st of May webinar and talking about work. So I'm sure these are unusual times. By the look of what we're already seeing, I think we've already crossed nearly, 70, 75 odd people. Okay, and I think clearly shows this topic is something that everyone is really interested to find out what's really going to happen. Okay, once the lockdown opens up. So to quickly get started, I want to welcome our esteemed set of panelists. Okay, who would be speaking on very actionable steps we can take to manage our collections, and not only solve our own cash flow, but also think about how do we solve for our customers during this unique phase that we all are going through. And to get a very holistic approach, we've actually called almost a complete set of CXOs. So let me get started immediately with the introduction. Let me first start with Mr. Dewang Narella. He's the CEO of Atom Payments, an entity data company. He's been in the financial technology for almost more than 25 years, much before financial technology was a sexy word. And now he actually supports large organizations across India manage their entire digital payments. So if anything else, what you can always go to him for is deep understanding of what's happening around the payments and the entire financial technologies in India and globally. Second up, we have Krishnan Chartterjee. He's the Chief Customer Officer and the Chief Marketing Officer at SAP Southeast Asia. An IMA graduate. He has spent years, serving large corporates and understanding the pain points and helping them deliver value. Not only is he a rock star at what he does at work, but just an interesting tidbit, he's actually a literal rock star offline as well. So if you guys want to, listen to his gigs, right? I'm sure he's going to hang out in one of these good places, and you can figure out what's the music really drumming these days. So that's Krishnan for you. And up last is actually Vineet, Jain, CFO Medtronic India. He's a quintessential CFO. He's currently working at Medtronic. He's worked at PepsiCo. He's worked at Tata Steel, right? So you can think about any large organization, and if you really want to figure out what processes really have to be set up, you really go to him. I've worked very close with him for the last couple of months, and one thing I can tell you, he's really someone who can build robust processes, balancing business objectives, and delivering customer empathy. This is something that's very unique coming from a financial professional. And quickly about myself, I'm Aditya. I'm the co-founder and CEO of numberz. As a quick context, numberz is a fintech SaaS solution. We try to be sexy, but definitely not as atoms are. But we actually help businesses streamline the receivables and collections. We work across Fortune 500 companies and fast-growing global technology companies in their mission towards improved cash flow and deeper customer relationships. In the last few weeks, which almost seems years now, by the way, right? We've really worked very closely with our clients on their collections and build a strategy and preparedness to manage their cash flows once the lockdown opens up. And just during this time that, we actually observed some very, very interesting observations working with the CXOs. The first was most of our CFOs did not take an all guns blazing approach to collect money from their customers. They actually sat back, they started creating a clear strategy, on how to think about collections and how to prioritize collections across their customer base. And another interesting piece on this one was they were not only taking a strategy for an immediate next few months, but they were actually thinking about how should they think about collections once they have to start thinking about growth and going after sales. That was the first observation. The second observation we figured out was similar to demonetization. This pandemic has caused a unique disruption where our old strategies of going and sitting in front of our B2B customers' offices, across the table and try to collect checks and cash from them is really not going to work. We're actually now seeing large corporates, deploy B2B payments across the ecosystems and actually enable digital payments, in the systems. So similar to what happened in a B2C scenario in terms of digital payments, we're actually now seeing it in the B2B scenario. And the third, is given the unknown nature of the phase, the CXOs are actually getting the sales teams and collections teams to primarily focus on talking to the customers and solving for them so that they can constantly learn what's happening on the ground. And they're trying to automate all the back end so that the entire focus of the company is to interact with the customers and get real-time data as soon as possible so that they can take corrective actions during this unknown phase. So first is they're thinking about their midterm and long-term, the short-term and midterm strategies. Second, they are trying to leverage new age things like digital payments for even B2B. And third, they're actually trying to figure out to spend more time with their customers and at the same time be able to get real-time feedback in order to change their priorities. Of course, these are observations just from the 60, 70 odd large corporates that we work with. Okay, our panelists here are someone who've been there, done that for multiple years. Okay, and they continue to serve large ecosystems. Okay, in this space. So with that, I'm actually going to start with the first question. Okay, to all our panelists is a slightly more generic one. Okay, but I still that is what is going to describe what we should do in this scenario. Is what do you think is different about this downturn compared to others? Krishnan, I'm going to start with you. If you could share your perspective.
Thanks, thanks, Aditya. I think the answer is very simple. Previous downturns, at least the ones we've lived through, have been about livelihoods, and this one's about life. So it immediately brings a significantly different context to say the response and how we are managing through this situation. I do think what's interesting about this downturn from an organizational perspective is it represents a burning platform like never before, because at the end of the day, what happens during a burning platform is behaviors start changing significantly. And because it is impacting lives, the behavioral shifts of this downturn are potentially what, in hindsight, we will see becoming, sort of the big difference. Because earlier downturns, if they're economic in nature, they can change business practices, but they don't fundamentally alter behavior. So if I look at, let's look at from an SAP perspective what we are seeing with customers. Historically, organizations in India, promoters and business owners, have not been very technology friendly. So in India, the answer to a business problem is never, the first port of call is usually not technology. Digital natives have done and what you're doing, Aditya. It's usually easier to answer a business problem with operationally, let's put a few more warehouses, trucks laga dete hain, let's hire some more people. Yes. That's the way historically it's been solved. The first big shift we are seeing from senior, older promoters, owners is they now want greater automation in the shop floor. They are thinking about how to transform their front office from selling physically to their customers to virtually. They're looking at the back office, the whole compliance, regulatory environment changing, and therefore historical, let's say, doubts about using technology to really drive your back office are vanishing because you cannot scale and manage businesses on that. So on one side, you're seeing business leaders having a cultural and behavioral shift. Secondly, professionals, we are seeing this whole work from home, right? So TCS, I think day before announced that 80% of their 500,000 base is going to work from home permanently by 2025. Yes. Now, it's not that work from home has not been possible till now, but it's again a cultural and mindset issue that unless you turn up in office and slog 12 hours, you're not really working.
Yes.
And consequently, work from home really till now has been that odd day that you don't have too many meetings. You sit at home and do a few calls.
Yeah.
But once you convert it to a full-scale professional, as an example, I can see many of our tycoons now starting to build housing societies with lease lines for their employees. So I think work from home itself is another massive behavioral shift. I think also people, right, from employee perspective. So today, if I look at my own organization, also what we hear when we speak to many others, Again, the lives versus livelihoods has changed employee mindset. Employees also in many ways became, somewhat coin-operated machines.
Yeah.
So we flip out and join places for. Now there is a far greater concern on the impact your work is having societally on other human beings. There is a recognition amongst people like us, that we are privileged. We are certainly not out on the streets figuring out how to get the next meal. So employee action also within an organization has begun to change. So, I know it was a long point, but the short summary is the difference that I see in this downturn with anything else we have seen is that it's a burning platform where fundamental behaviors are shifting. And those shifts in fundamental behaviors allow us to redesign business models, using principles which to a large extent were not acceptable before.
Very interesting. I have another brilliant summary. So I think you've summed it really well, Krishnan. Thank you so much. With that, I'll quickly get into Dewang. Dewang, your perspective.
See, I think I would not repeat what typically Krishna said. I very well laid down basically the basic framework. But when I look at things, let's look at from a business of payments point of view, because when I look at from a payments business point of view, how this is fundamentally impacted, because payment touches every aspect of every human being in this country.
Absolutely.
Two differences. One basically is in terms of the overall psyche. First, basically, let's look at a customer psyche. Government and basically all the medical and health professionals have been telling customers not to use cash as much as possible. Try to use digital payments. Try to use contactless if you can do contactless. Don't try to do contact and PIN. So that is one of the biggest behavioral shifts what government is trying to put. But despite that, when you look at the realities of life out there, still cash is the king out there. Because if you've seen just a couple of days back, there have been articles in terms of a lot of business establishments not being able to accept digital payments and other things. So one, I think there is going to be a huge amount of shift in terms of how consumers, how basically are going to look at participating in the economy itself. So that is a fundamental. Like I'm going bottom up because that's right from the customer side. I'm trying to look at that. When you look at from overall business aspects, see, ultimately whether we like it or not, we see manufacturing has to be there. How people consume it could be different, but manufacturing cannot die.
Yes,
your shop floors are going to be there, your factories are going to be there, and it's not only going to be a services sector. Although we would like work from home and everything else, fundamentally people are going to go to the shop floor and everything. And there are going to be huge amount of differences in terms of people, the way people perceive and people work out there in the shop floor. Yes, there is going to be a certain amount of automation there, but aside from automation, one of the key things is right from basically factory gate to basically the shop gate or the farm to fork kind of a philosophy when you look at material coming down from there. So whether it is agriculture, whether it is basically materials, anything else, which is going to go into retail. So one is basically production. Second is going to be on the supply chain. That is the logistics side of the whole thing, which is going to shift out there. And third is finally the sales model at the storefront itself. So one of the key things which we're trying to look at, for example, we work on payment side, we work both with online and offline merchants. Thankfully, seen a lot more transactions happening on certain different categories. So although retail is not doing right now, but at some point of time, retail will start out and will start doing transactions. But we're seeing education, we're seeing government, we're seeing BFSI, a lot more transactions happening on online. Offline, practically, the transactions have got like virtually gone down to a ground to a standstill only because of a lockdown right now. But we would expect basically economy to open up at some point of time.
Right.
But the fundamental shift that we'll see in the behavior, for example, when we work with large format stores like maybe a Shopper Stop or maybe some like a Future Group. Now, when you look at an apparel brand, one of the fundamental shifts is going to be like people are used to doing touch and feel for fabrics out there. I think there you will see a fundamental shift in terms of how a consumer will go down and consume those things per se. But on contrast, when you look at same thing going on to something like a grocery or something, they are anyway going to go to the grocery store and maybe a food hall and pick up items out there, whether it's fruits, vegetables, or maybe groceries. So there is a touch and some part of business is going to be touch and feel, some part of business is not going to be touch and feel. And other parts of the consumer segments, for example, automobiles and other things, those are anyway going to come back because at some point of time, we are seeing automobiles go off right now. And finally, when you look at the overall shift, and the whole thing which you're seeing shift right now is on that travel and hospitality. because that is one segment we've been working on pursuing out very, very extensively in terms of the downturn. But naysayers are saying it's going to be at least about 1.5 years before you're going to see people actually going into a large amount of travel. But I don't know, there are a lot of doomsdayers out there when we look at things what has happened in China. Because China, when they opened up the country, Wuhan and everywhere else, we saw the sites out there where people domestically, people are crowding all the places. So, and business was back to booming out there. So there are going to be doomsdayers out there. But having taken a very not a contrarian view, but a very conservative view, you'll see things happening in 1 to 1.5 years. So every industry segment has undergone a radical shift in terms of the way they're going to operate. Yes, the benefit for everybody else, and I think it's what Krishnan pointed out, was going digital is going to be the most important thing. Digital transformation is going to be the most important thing. People are going to look at that. Till such time we have the cure or maybe some sort of a malady for the coronavirus or COVID-19. The moment it comes in, I think memories are short. I think so people forget things beyond a point, but till such time the behaviors would have changed fundamentally and radically. And so this is where we expect transactions, people who are looking at, for example, coming back into payments front. We're saying one, of course, we're going to see businesses going to adapt more and more, let's say, digital payments there, because people who are moving towards cash and other kind of options. Like, for example, I'll give an example of, let's say, TiE hospital we work with in Bombay. They have point of sale terminals out there. They tell their patients not to give payment even on cards. For any patient to be admitted, they tell them to make a payment online through payment gateway and come and get admitted out. They do not want even and the guy at the counter to take a card payment. Forget cash. Cash is out of question. But they don't even want people to use point of sale machines in their hospital. And that's a COVID spot. So that's a shift you're going to see out there. People are going to look at new forms of payment norms out there, both from businesses and from a collection side. It's going to be a lot I think interesting piece out there in terms of how small businesses are going to cope up with this, because a lot of guys, and we thankfully in this current day and age, we have practically every digital channel which is available right now for doing payment, whether it is the government-backed NEFT, RTGS, to your card-based payments, to your net banking, to maybe using wallets, to using UPI. So you have all the plethora of options, payment options, which are there right now in place for doing remote payments. Of course, in physical payments are not going to disappear as fast as people think, but they're still going to be there.
So basically what you're saying is that across industries, there will be a change in behavior in the way payments are going to be done. And therefore, that's not the way sales will be done, the supply chain will be done. Great. I mean, that's a great point. With that, Vineet, quickly over to you. Your quick observations on how do you think this downturn is different?
Yeah, I think my co-panelist actually mentioned about the big picture. So it is actually very different in a sense that it is not like financial crisis which impacted certain set of industries. It is not impacted a particular geography or a particular industry, like auto was in a recession for some time. But this actually has an impact across industries. Yes, the level of impact is slightly different a bit from one industry to another industry. So in that sense, it is actually having an impact across the globe, across geographies, across industries, and hence the pointers that my co-panelists mentioned about what behavior change that are happening, whether it is work from home, the way we work, or a digital payments, that is going to be very, very critical going forward. Now, I mean, I can answer about what are we doing in terms of in the short term and long term in terms of the actions, right? I mean, I think
I would do, Vineet, we have that question for you anyway in some time, and I would want you to go deeper into that anyway.
Sure.
But we're saying basically, but any other observation point on at a high level why is it different? You're basically saying because it's across industries, across geographies. And it's very different from the typical sectoral kind of downturn.
And then obviously, the behaviors are changing. I mean, whether it is the way you want to collect money, how you collect money, and the way you work, the entire landscape has changed, and that is actually having an impact on the way we work and way we collect money and interact with people.
Sure. I remember one statement that you had made some time back. You said that both your customers and your own team members, will have more work from home. So in this scenario, how do you think about collections, right? So it's just not about what's happening in industry, but that's a behavioral pattern. That's a pattern. Okay.
Yeah, that was actually, Aditya, you're right. That was much before this work from home lockdown actually started.
Yes, I remember that. Cool. So with that, I'll go to the very specific questions that I had for each one of you. Okay, and I'll again, start with Krishnan. Krishnan, the one big area that, as I said, we observe a lot of our customers think about is they're taking a step back and they are trying to think about their plan as to how to think about the collections, and then not only from a immediate short term, but even from a slightly long term. So I know as a chief customer officer, okay, at SAP, you have almost two very important roles. Make sure that your customers are solving their problems, but also your customers are with you during this tough phase. So you have a very interesting way. So would love to get your perspective as to what framework you're using, especially given the fact that SAP is someone who has all the data, customer data, as well as the financial data. So when you go to your clients and your systems already have this data, what framework are you giving your customers to think about their collection strategy?
So, I'll say a very tough question. I think, but
I should be from you, that's right.
Given the nature of the panel and the audience, let me take a stab at it, and let me first give a disclaimer. Everything I say is in the mind, and we will see how it works in the practice, as it were. I think three things for me. The first is collections historically has been driven a lot using lag indicators and not lead indicators. And I think one of the biggest shifts that we are going to see is we will have to move from lag to lead, which means that if you have a product which has got sold, the consumption of the product, the value derived from the product will have a significant implication on the collectability of the sale itself. So that's one. So find your lead indicators and start focusing. Don't think about collections when the bill comes due. It's already too late. I think the second thing is we have to think a lot about people. So there is a very human aspect to collection. So in times like this, clearly, if you are, if somebody has to pay you money, and obviously the cash flow crisis has started, and there is a limited pool of money to pay from, you have to become the top one or two that entity would wish to pay, which means there is significant amount of work that needs to be done by human beings in the chain in a value-added way, in a CRM or a customer engagement perspective, which translates to the trust and respect needed for a customer to put you as number one or two in their pecking order or importance. Right. Obviously, along with the point one I also made, usage, value realization, all of that. Yeah. And consequently, if I land both of these, my third point would be the process itself needs to be relooked at significantly. And I think technology needs to be used in the collections process to completely transform the way work is delivered in that entire value chain called collections. And I have a very simple sort of at SAP, we would call it a digitalization framework for a process. I'd say if you take all the transactions involved in collections and you were to put them in a 2x2 around control and impact. So control meaning you do have full control on the transaction. In collections, many a time, very few transactions do you have full control over, and impact being the transaction's impact on actually bringing back your money to yourself. I think when you do that 2x2, you will have to start differentiating action using technology on the set of transactions you come with. Ideally, transactions which fall into the low impact, low control zone are bad transactions. If your people are wasting time doing that, you want to get rid of it completely. These could be escalations, bad billing. Many a time, wrong invoice, that's right there in that zone. You don't want to do that. So solve that, and you will need technology to do that. Transactions which are high in your control, but low in terms of impact, those need to be automated as soon as possible. There are transactions which are high impact, but low control. So for example, your sales team has a big role to play in collections, but frequently in many businesses, you may not be able to impact your sales team, who even in today's scenario is desperately trying to sell. And that's where a analytics-driven broadcast strategy typically works. So gamify the whole system, share information transparently, see whose patch is doing better than somebody else's. And finally, the set of transactions which fall in the high control, high impact zone, that's where your people involved in the process should be putting 80% of their time, like a Pareto. Those will be few transactions, but they will be the human to human, they will be the highly important transactions necessary to be able to generate a good collections process.
Perfect. I think that's a brilliant framework, actually. I think we actually get asked this question very often. Many times when you speak to the CFOs, they say, for example, they say, how are you going to help us control our collections from the government? Okay, and it's very difficult for us to answer because no matter what I do, what technology I use, it's not easy for us to influence the government. But the way we always tell them is that you have to think about the way you talk about the digitization framework is the government may be one quadrant, but you have a segment of customers you can still control through proper engagement on a regular basis, and that can be automated. So you're bang on. I think this is something that, what we will do is post this session, we may actually, if you're okay with it, we may even see if we can share it with our audience and in a more structured way, because I think this is a very brilliant framework that all of us can apply into our daily lives, okay, irrespective of whether we are a 100 crore company or whether we are a 10,000 crore company.
Please feel free.
Thanks, Krishnan. Thanks for that. With that, I'll quickly switch over to Dewang. Dewang, what you heard from Krishnan was, of course, how we can think about the strategy, what type of data we can use to think about strategy, and what technology can do around it. Right? I have two sets of questions for you. One is, as a CEO of a company, how are you thinking about the immediate short term, and how are you thinking about the slightly mid-term to long-term, wherein you will eventually have to even grow in a slightly more risky environment? So how are you thinking about, as a CEO, balancing these two strategies? And second, though, you did speak about in your initial pieces on the B2B payments, but then again, as a CEO of a B2B company, B2B payments company, any point that you want to share in terms of how customers can help in their collections? But
perfect. Yeah. The first thing, I think when you look at basically the first piece as a CEO, if I look at what we have traditionally done basically in our enterprise, and that's, I think we've technically followed what Krishnan was talking about, a multi-quadrant approach. And thankfully, being a digital payments company, we have the luxury of going down and collecting payment digitally. We have been digital from day one kind of a thing, except where we talk about some government payments, or when we work with public sector banks and government, because those departments are slightly different, so the set of customers is slightly different out there. So one, in a short term, and so for us, the strategy between short term and long term doesn't differentiate as much, because that's been a consistent part of the strategy and framework that we've been following consistently across. But if you look at, let's say from a slightly longer term, slightly more longer term perspective, when we look at things around there, although we currently, for example, we've been using things like Natch and other things from our retail customers. So just to give a perspective in terms of what sort of customer that we work with. Now, because that will help you in terms of understanding the overall gamut in terms of how we would look at approaching this problem.
Sure.
Essentially, Atom does two sets of payment. We essentially are an omni-channel payment service provider, which covers basically online, offline, that is point of sale terminals, IVR, as well as basically mobile-led payments. Now, largely it's two kind of silos. So one is online, and second is basically you have an offline payment. And within online, we have a certain set of customers who are there on a monthly invoicing kind of a structure. And large part of the customers, being a payment company, we debit or remove their charges upfront and basically settle the monies with them. On basically a point of sale, again, we work with banks out there, larger banks and larger partners out there. And second is basically we work with direct retail merchants. So from direct retail merchants, we have basically rental collections coming in from the merchants on month-on-month basis. And so what we had formulated as a strategy all across. So one silo, clearly, when you're looking at a quadrant, is the least impact basically in terms of we have immediate payments coming in on a real-time basis. You're not worried as much about those collections because those collections are already there. Yes. Second part of the whole thing is in terms of basically online merchants who are there on a monthly basis. Of course, these merchants do require some amount of follow because they would want to make a payment, although make a payment using the traditional channels like RTGS, NEFT. Nobody does a check payment in this current days, and they do not want to really go on to using other kind of points of digital payments because being a corporate and also they follow cycle. We have complete full-fledged recovery team in terms of following up and doing that. So there's not too much of a process in those corporates. It's fairly well set process in terms of those corporates to basically make sure the payments are there, invoices are raised, and payments are given out maybe in a week's time or 10 days time as per whatever payment comes. Third larger piece is basically, of course, on the government and the PSBs. When you look at banks and they are, I think, banks and public sector banks typically fall on a common bucket. Although we have not seen gory stories out there because of some of the things which is spoken about collecting payments from the government as well as from the, so I want to say public sector banks, we have not seen too much of an inertia because they do realize that we are a part of an essential service. They're part of the high impact, which typically Krishnan was talking about as overall part of the service of the bank itself. So yes, they do have a process, and even in the current lockdown kind of a scenario, for us to collect payments from them in any other mode, they have to follow a set process. Because if you look at the way government process or maybe a PSB processes payments, it starts from the bottom person. Even when you raise an invoice, senior manager or an AGM has to basically put that stamp on it, reconcile it, and then it goes on to the DGM, and then it goes on to a GM which will final sign on it, and there has to be a physical signature on this. We are not talking about digital signatures. See, fundamentally, that's so. Thankfully, the banks are working right now. They're coming to the offices and alternatives. Yes, the payment do get delayed by maybe a couple of days. We don't see too much of delay out there. But yes, there is a physical and a manual process, and that is where we are looking at basically seeing how can we best automate that sort of cycles out there, given over a period of time. So as a CEO, yes, there are things we can.
Absolutely. So the interesting what I've heard from you is that. Even as a payments, digital payments company, right? There sometimes are instances where you have to even think about physical intervention. I mean, again, it just it goes back and sort of reverberates the same point that Krishnan made on that matrix. Is there will be some areas that you have to think about, and when you think about your strategy, think like that. Use your data, okay, and your customer information to build that strategy, and then sort of do an action item around that. Great.
Absolutely. So coming to the second question out there, when you mentioned about payments, as a payments company, what we're trying to do out there. So one, basically, we do have solutions for basically the customers across the breadth. For example, one is basically your traditional merchant sites, whether they do it online or whether they do it anything. So when they do it online, they put it on their websites and they can integrate practically the payment gateway and enable your card payments, your net banking, RTGS, NEFT, and everything on a common silo. On the other side, we have e-NACH and NACH-based payments for people who want to collect basically recurring or maybe subscription payments out there from their customers. Third, because for example, a lot of dealer distribution kind of a network is basically where they want to do, because that's one of the key aspects of payment collection out there. Third, basically part of the silos is basically innovating in payment solutions. For example, we created a product called mGalla, which is a mobile-led payment product, which every merchant can download, and then they can send out links and they can basically have customers make a payment using QR codes, including cards. So it's a multi-acquiring solution, as we call it. It allows a customer or a merchant to collect payments using your QR code, your link-based payment, which is your essentially internet-based payments, and point-of-sale terminals, and covers the entire gamut of payments out there. So idea is basically offer as many payment solutions to the customers out there and see how they can basically help them in their collection process.
And I'm going to pick on one point, and when I go to Vineet right now, is really around collecting money in the distributor value chain, because we were actually speaking to the government, folks at the Ministry of Commerce, and they were talking about that how a lot of money is actually being stuck in the value chain. So while the essential services are really going forward, okay, it is the distributor value chain that is really getting affected. And that is where they were talking to say, how can we help sort of unlock this whole thing, both using technology and payments. So I think that's a good segue to quickly get into with Vineet. Vineet, I think we've heard about the strategy, we've heard about how to framework. I think the difficult part is execution. And I think that is where the devil lies in the details, right? So I know that you've been someone who's so focused on execution, and you have a wide variety of customers, okay, right from government to large hospitals to distributors, dealers, and now even small hospitals. So and there's other piece I also want to figure out is when we think of execution, it's also about our own people, right? And now about this problem. So I think would love to get your perspective on some of these execution pieces that you're thinking about, and how do you think people who are on the seminar, on the webinar, can actually figure out a few takeaways on the execution side?
No, thanks, Aditya. I think some of the points and the bigger picture that my co-panelists mentioned and about the solution, the technology, and certainly those are very, very valuable and an input. I think when you go and execute and ask for the money, and that's when the rubber hits the road.
Yeah.
I think first I would start with in terms of breaking it into what are we doing right now. I mean, as the lockdown has happened and what we have been doing it consistently as a part of our strategy.
Yeah.
I think the first thing is you need to know your customer first. I mean, do they really have a challenge in terms of the cash? So our customer is, if I just give an example from MedTech, our customers are distributors as well as the hospitals, right? And we know that they're all being locked down and there is a severe impact on the hospital revenue itself. So we know that there is a problem, right? Now, and as soon as you know, you can actually start working on it. So that's one. The second part is that once you know your customer, you start to engage and communicate with them. And it's not necessarily about just calling them for collection. I mean, we have been doing it, but I'll just tell you what we are doing right now. It's all about just calling them for, what, are you safe? Are you okay? What's the problem? Can we help anything? Because we are in MedTech and we need to be close to the customer. That's very, very critical. I tell you, one of our team members actually listed down a list of all customers and started calling, not for collection, no discussion on collection, just well-being of the family and individual. So I think Krishnan talked about people touch. I think, and if you need to be in the top 1 or 2 people who needs to be paid, I think that is where you need to stay connected with your customer and start engaging, right? I remember we doing this exactly the same thing when the Yes Bank fiasco happened. Nothing. We just called up everybody and said, "How are you doing? Is your bank account impacted?" And we had the list of all the Yes Bank customers from the customers who actually pay through the Yes Bank. So I think you need to know your customer. You need to understand that you need to communicate with them irrespective of what happens, right? And that is the engagement part that I am talking about it. Now, as soon as you have done that and all that, you still have to collect the money, right? I mean, the relationship is good, but you also have to run the organization to get the money. I think you start getting into a little more detail in terms of profiling of your customer, or what we call it, the segmentation of the customers, right? Who are my top gold standard customers? Who are my silver standard and who are my bronze? So we have the clear definition in our customer framework. So it can depend on revenue, it can depend on customer service related, and it can depend on financial. So there are 3 parameters on which we generally choose. There are a couple of other parameters, but these are 3 critical ones, which is the revenue size of the customer, the customer service experience, and as well as the financial performance of the credibility of the customer from a financial point of view. So once you have done that, your approach has to be very different for a gold standard versus a bronze standard customer, right? What I will do with my Apollo of the world, which is my gold standard customer, I will not be doing with somebody who is just a small customer, and my approach will have to be different, right? So you define that approach very clearly in terms of how you're going to be executing it at. Let's say I'll give an example for one of the, let's say for gold standard, your interaction level will be at a very different level. You will be interacting with the senior leadership team, the procurement directors, everybody who's making an impact. So you have a 3 or 4 pronged strategy, just not calling for collection, but staying engaged in terms of the partnership. So it's a long-term partnership. And this is one point which is not important, not only in the short term, but also in the long term, right? It really helps in building the partnership. And also trying to ensure that the entire partnership is built on a trust and on a long term, right? That's how you go. And you also have to make sure that this long-term partnership of a gold standard customer is also linked with the automation. So again, an example of actually with Apollo, we have an EDI. So EDI system with the SAP LinkedIn, which means as soon as they raise purchase order, we see it, we raise an invoice, they're able to download it, no physical interface, nothing. And we are expanding that to all our gold customers. So again, you segment it, you prioritize it. And for some of the other customers, say for example, for bronze, you have to really look hard whether you want to go forward in terms of from a sales point of view, take a little bit of break, take a different risk profiling, right? So once you have done this, the other is how can you help them, right? Because you're not in the business for a 1 month or a 3 months, right? Beyond pandemic, you also have to work with the same set of customers largely. So what can you do to help them, right? And that is when you start to engage with them in terms of finding solutions. Okay, what are their challenges? And that is why my point goes, going back, knowing your customer is very critical, right? So you start to give them the solution. Okay, you can't take the capex investment, so we do sell capital assets as well, the big machines. What are the solutions we can provide? Can we help you with the banking solutions on equipment financing? Can we help you with the lease financing? Can we help you with the short-term financing with third partner? While you are immunizing yourself or isolating yourself from the risk, but you are still helping the customer because it's a long-term partnership.
Got it.
So different business solutions required work with the customer. That's absolutely critical. I think from a governance point of view, if I just come on the governance point of view, it's very critical. Basis the gold, silver, and bronze. You start doing your governance with your let's say your collection team or AR agency, wherever you are doing the governance through, and start to mark incentive, whether you need to tweak your incentive structure, whether you need to do any other performance criteria. So at least you are governing through your team also in a much more sharper ways, keeping in mind the customer classification and everything else, right? I think so that's on the short term, and some part of it is also long term, because it does not happen just tomorrow morning, right? I mean, you can't categorize your customer goal tomorrow morning and start to have EDI tomorrow morning itself, right? So I think some part is certainly going on for a long period of time, and some part you need to do it right and there, right? The other part on the solution, and I'll tell you some of the examples. What we have been doing is we have a very clear mandate to move collection to digital, whether it is RTGS, NEFT, or NACH. So we moved a lot of customers to NACH. That actually insulate you from or risk or removes the risk from they actually paying rather than you pulling the money back, right? So we have a lot of customers now moving into that platform. Apart from that, the LC-based payment, whether it is wallet-based, UPI, barcode-based, multiple business. So you need to give the options to the customer to be able to choose how they want to make the payment, and including credit card and many other mode of payment. I think once you give partnership in terms of financing solutions, once you give multiple modes of payment, you start to work with them in terms of resuming the business. So I think, and then apart from that, there are multiple other options available when you actually start to work with them on a customer side. Can you do a pay-per-use model? Can you do a rental model? Can you start to work on a different model? And it obviously actually depends on business to business. Obviously, you can't copy paste to businesses. I would say last thing on the strategic business partnership, right? On the long term, I tell you, when in a couple of organizations that I've worked with, what we actually look at it from the customer's eye, right? So while our year end ends in April, which is very unique for many of them, and we work on a US for 52 weeks, but some customers actually have their year end on March, some June, some calendar year. So when you do a planning, you keep customer in mind. So when you do a sales planning and a joint business planning, so what we do is what we have done with a large set of big customers. Say, for example, gold standard customer is a joint business planning.
Got it.
Your entire business plan has to be based on what the customer sees is what their requirement is, what their financial years are, and then based on that, you actually devise your plan with them and work with them on the long number of the solutions. Right? So I think that is very critical if you really want to work long term with a customer, like a partnership, and then you segment which customers you want to work right now and based on the risk profile. So I think hope it was useful in terms of actioning.
Yeah, absolutely. I think it's very interesting that what Krishnan started, you guys have actually just really built on it, wherein you actually again started by saying, use my customer data and attributes to build my strategy, right? Of course, he had a very clear framework, but fundamentally you did the same. You said, I'm going to divide it between gold, silver, and bronze, and I'll have a very specific way I'm going to divide that. And based on that, I'll have specific treatments. And then I'm going to use technology in order to ease these pieces out, okay? And then I will, with some of my high impact, high control customers, right? I'm actually going in and actually setting up the business process itself, right? So again, each of the quadrants, you are taking specific actions, okay, to solve that. I think that's, again, it's brilliant at what one started. The whole team has already followed that up. But it's bang on. I think this is something that we've seen where technology can help both on the analytics side as well as the process side. Yeah, I'm sorry, Vineet, you're saying something?
No, I was just saying that, apart from that, you obviously have to provide them solutions, right? That's some of the solutions that I mentioned about, right?
Yeah.
And that's all I want to add to that list.
No, absolutely. I think that is something that, in fact, as a next webinar we are doing, we're actually getting in people from fintech companies, banks, and other lending companies, okay, to talk about what are these innovative solutions that companies can offer to their segments in this time. So I think that's another very interesting point that we are getting from our customers to say in this phase we'll have to be innovative, both in terms of pricing, in terms of financing, and everything else. We've run out of time, but
and then also,
go ahead, Vineet.
Yeah, some of the risky customers even think about having insurance of your AR and factoring. So again, I'm not going to a separate topic, but again, you use your data to define what you want to do.
Okay. So we had two very interesting points that came again and again in the chat. Okay, one was around post the lockdown, when you go back, how do we start thinking about our own customer credit problem? So I'm going to again start with Krishnan on this one. Krishnan, the reason I'm again starting with you on this one is, a lot of, you made a very interesting point. It is lead versus lag. Okay. And so far we've really seen people talk about, they go to a bureau, but bureau is almost 3 months lag anyway. Okay. And the only lead indicators are actually in your own ERP. So I think that's what I want to start with you. So quite a few people have asked us that. So what would your suggestion be, and how are you, in case if you guys have any best practices around it?
So I don't think it's possible around the situation that we are living through right now.
Right.
But I do think as you get back, see, right now, let me go to the second point I talked about, which is how important are you to the customer?
Yeah.
In terms of when you're, and that's really where I think going back, there has to be a lot of empathy. I think it has to be understood that there are cash flow problems out there. Many companies have stopped paying salaries, and consequently with corresponding impact. So my suggestion right now is potentially any organization which is now looking at that situation needs to take a task force based approach. So look at analytics, draw your judgment. I think Vineet made excellent points in terms of how to really slice and dice and have differential. There is no one size fits all approach right now. It's going to be very important to take every customer situation on a case by case fashion, and then start understanding how we can help. And I think if that process is done well, and customers, the people who owe you money, come out of the situation knowing you care and you were helpful, that will put the priority, back on you, and at the same time increase probability of that recovery happening.
Got it.
That's the best I can offer.
Perfect. And very quickly onto you. I know you've always spoken about credit management. Okay. Any quick takeaways from you as to what people can think about credit management once things opens up?
I think I'll repeat some of the comments that I made earlier also. But Aditya, as we open up, what I was saying is that we are in the business for a long term, right? It's not for 3 months of shutdown or 2 months of shutdown, right? So keeping that in the mind, you start to work with the customer in terms of how do we open up, and it is important whether they are able to sell it or not, right? It is important to understand how they are able to actually realize their revenue, and you start to see the revenue cycle coming back. You start to work with them much more closely to make sure that the impact is minimized, right? I think that's the approach that you would be taking it, and other points that I made about data and profiling of the customer, right? So you obviously support your customer, which is gold and silver, a little more than the bronze.
Correct. And there are two last questions that we have. So Dewang, one quick question that we've got is, and you may be facing this, a lot of customers are talking about force majeure, okay? That they've been hit by force majeure, and they are claiming that, and therefore they're not making payments. So as someone who gets affected by this, and maybe you've seen it for a few of your customers, what actions are you guys taking if a customer is evoking force majeure?
Okay, one basically from our side, because the kind of we have a lot more large value payments coming in from a very few set of customers, and small value payments coming in basically through invoice from a larger set of customers. Rest of the payments, because being a digital payment company, we get it directly from we debit it from the customers. So we have not faced that scenario per se on a force majeure when you look at specifically for a large value customers. But the small value customers have come back to us and have asked us for a waiver. Okay. For, let's say, for a limited period in terms of, let's say we have rentals we charge for basically point of sale machines. Sure. Because the businesses are shut, there is no way they can pay the rental out. And I think there has to be an empathetic approach out there taken in terms of, do we continue that or not continue that? At the same time, for example, this impact has come to some of our banking partners and all, wherein some of their merchants have come back to the bank and asked them, okay, fine, can you do a waiver on the charges and everything else? Right. And consequently, bank has come back and asked us basically to waive off the similar charges. For us, we work with our partners in terms of, because we work with down-the-line partners, ultimately your cash flow needs to be protected. It's a whole value chain which is there. So not only yourself as basically service provider, but all your partners who are providing and helping you provide those services, they also start taking the hit out there whenever a situation arises. But having said that, when you look at a force majeure scenario per se, one of the biggest constraints basically which a lot of people are going to face here, because yes, one important aspect we need to look at is there a payment problem or is there an intent problem? Correct. If there's an intent problem, then you can't do much, because a lot of times a lot of people are actually putting in force majeure and everything else, maybe because of intent, not because of actually payment problems out there. Because if you have genuine cash flow issues, you would say, okay, fine, I probably invoke the force majeure and try to not make payments or try to get some sort of relief from basically the service provider. Absolutely. If you had any, that's the bigger, it's more of an intent problem than anything else, and trying to save on anything.
Yeah, I will use that as a last question to, go back to Krishnan. And Krishnan, again, I'm coming back to you on this one, is we've got another question which says that especially for customers, for businesses who have large set of small businesses or individual, I think we've lost him. Okay, so Vineet, I'll then send this question to you. Okay, one specific point that we are getting is, imagine if we have, tens of thousands of small customers, okay, we have to collect from, and therefore while we do want to use our personal understanding of them, okay, but they may be all spread out across the globe. What are some of the few indicators that you may use to pick up the intent versus cash flow issue? Any quick suggestions you have on that front?
I think it is important, as you know, if they have a business, if it's the retailer is shut, you know that the business is in a problem. So once you know the customer and their secondary cycle, their primary and secondary cycle, you will be able to really understand whether they have an intent problem versus the real cash flow problem, right? And once you start, as you said, continuously engaging with them really gives you that kind of an insight. It doesn't come just today morning or tomorrow morning, but continuous engagement will give you that kind of an insight whether they have an intent problem or not.
Got it. Cool. I know we are slightly over time, okay, but thanks a lot, panelists. I think this was pretty awesome. I think, of course, my key takeaway is that there's no silver bullet, okay. A lot will depend on, I think one is definitely you have to be in touch with the customers. You have to have a customer data, and now you have to use technology in different aspects of this entire process in order to solve for the different type of customers you may get to. But all of it will go down to your customer relationships, okay, and your deep empathy for the customer. I think that is the one key takeaway I have had across all three of the panelists. So with that, thank you so much for finding time, okay. I know we have overdose of Zoom calls these days, so the fact that you guys have found time to share your insights is really, really commendable. To all the audience there, we may not have been able to answer all your questions, but we've noted all your questions, and we'll make sure that we get back to you. We may also get back to the panelists in case if those questions are to be for them, so that we can make sure that whatever your queries are, we've been able to give you the best point of view from that. So with that, thank you so much, Vineet. Thank you so much, Dewang. Unfortunately, we've lost Krishnan, okay, to the connection, but all the best. Keep safe, and we may keep coming back to you for more insights. So thank you so much.
Thank you. Stay safe, guys.
Thanks.
Sure.
Thanks a lot to all the audience.
Yes. Okay, without TiE, this would not have been possible. So really appreciate TiE Mumbai. Thanks, Naveen, everyone, and thanks, Numbers team. Cheers. Bye.